now we move on to another very emotive subject, I guess. VAT. Yes, it's upon us, ladies and gentlemen. So this is something that's going to affect all of us. And to discuss this and how it will impact real estate transactions here in the UAE, I would like to invite on stage David Stevens, Dunia Fadi, Christoph Engels, Philip Caulfield-Smith, and finally, Tim Rose. Thank you. David Smith is a partner at Ernst & Young, Dubai. He has more than 20 years' experience in direct taxation. Dunia Fadi is the CEO of MD Properties, and she's been working in the real estate sector for 12 years. Christoph Engels is the Chief Operating Officer at Kensington Exclusive Properties responsible for the company's future implementation of all business structures. Philip Caulfield-Smith is the Head of Estate for the UAE and Middle East for Pinsent Masons. And lastly, Tim Rose is the Head of Real Estate at Emirates NBD. Right. Hopefully we'll have time for some questions from the floor for the VAT. Right. I would, however, like to turn to Tim, if I may, for my first question. In lay terms, please, because I know I'm a little bit of a simpleton, really, in terms there. Can you just tell us, please, how VAT will affect developers, secondary/primary market, and end users, as far as you know? It should be on. Hello. Or you can... Hello. Try that one. Does that work?
How's that?
No.
Is that okay?
Yeah.
Okay.
Perfect. Thank you.
All right, well, I had to get a few notes on this. It's I've tried to keep it as lay as possible in terms of where this VAT is going to be coming in. Okay, so look, if we address the developers first, is it going through clear? In terms of residential, that's probably the some of the biggest interests. So at the moment, that's going to be zero rated. So from that side of things, zero rated means that you can claim, you can have confidence that you can claim in terms of the 5% being claimed back in terms of any charges during the construction, or any kind of professional parties that have been involved with the transaction. And also probably gives you confidence that you don't have to be charged in the 5% to some of your purchases. It's really important though in terms of the that it happens within 3 years after completion. So you lose, as far as I know, that after 3 years the completion period, the zero rated situation goes after 3 years. Probably one of the things which I'll rely on some of the advice for some of the other panellists is on some of these post-completion plans that are going on at the moment. Obviously, quite a few of those are happening beyond the 3 years. So there's a situation of whether that's going to it's going to complicate the situation. I think the commercial is a lot more easier. It's in terms of transactions. The VAT is going to come in terms of sales, but also the leases. The complication, I suppose, is if there's within the SPAs, there's not I suppose the VAT hasn't been taken into account, and therefore the seller's going to have to absorb that 5% within the purchase price, because it's effectively assuming it's inclusive of VAT. Just touching on the residential in terms of the secondary and primary market, I'll keep it as lay as possible, but whenever you're buying in the secondary market, there's not going to be the VAT essentially within the purchase price. From a commercial point of view, once again, we're talking about the rentals will have VAT on top. What's going to be important though is that you need to allow that. This is on the residential, but as well as the commercial. Service charges are going to have VAT added. In terms of your master community fees, are likely to have VAT, and then the property management. So from a residential point of view, if you're not registered for VAT, your cash flow can be restricted because of the additional charge. If in the instance you are not going to be registered for VAT and be able to claim back for that.
Okay, thank you. It was a loaded question, sorry about that. But I do have a good one for Christoph. Christoph, do you think VAT will have a negative effect on the property market?
Thank you, Mario. You give me, obviously, the crystal ball question that everybody is waiting for. Very difficult to say. I think we need to differentiate between residential properties and commercial properties. As residential properties will not be taxed, even off-plan properties have a 3-year period after completion. I don't think that developers will wait now beyond the 3 years to sell their properties. So in my point of view, it will not have an impact on residential properties. If I look at the service charges like transfer fee at land department, that will then eventually go from 4 to 4.2%. If I look at brokerage fees, on average 2% will go up to 2.1%. We will then actually have to see how this works. Commercial, obviously, that will be different. If I see now that from January 1st, commercial properties will be taxed, then I believe that there will be a run on commercial properties up to December, because obviously everybody tries to avoid the 5% extra, the VAT. So we'll see how this happens. I believe that some brokerage firms in general will use it to get a hype in December, say like buy everything before VAT comes. So I think that's what we will see. In general, what I've read so far is that VAT in general is a less disruptive tax than other taxes like the excise tax that we're going to come in October, for example.
Thank you. Dunia, turning to you, what does a business need to do to prepare for VAT?
Well, the initial part that we all should do, and that I myself had to do, is educate ourselves. Go through every possible, information that is out there, and then educate yourself in order to apply it in your business, because the VAT is applied on supply of goods and services, and we fall under that. We provide services, so we must also register at the Federal Tax Authority. In order to do that, we have to evaluate our business. We see if we meet the threshold, the mandatory or the voluntarily. After that, we have to make changes within our business, the accountants that we deal with, your bookkeeping, the way you register your transactions, multiple things, even technology. What technology could we adopt to make it easier for us to communicate with the government? Because we have to be answerable and pay tax to the government, so we must have a technology that would match with the requirements. So we must do a really extensive homework before it comes into effect, which is January 1st, 2018. Other than that, I think in general, just keep an eye on the Ministry of Finance website. The registration is definitely not yet open, because I did check myself. So they said that by mid-September, it'll be open. And once it's there, then you go ahead and register and try to educate yourself, because it's very important to be up to date with this information and not delay your tax payments. Also, the one thing you should do is know that you have to keep your records for 5 years, all the invoices, all the paperwork related to the VAT, and as well as you have to review it quarterly, if not a shorter period before that. So keep an eye on whatever information is out there. It's not yet very clear, but we're sure that we'll get there. We have enough ample time to educate ourselves.
Educate yourselves.
Very important,
Perfect.
yes.
Okay, let's turn to David. David, Tim touched on it, but the question I'd like to ask yourself is, for the purpose of the audience here, what is the difference between zero-rated and tax-exempt when it comes to VAT?
Okay. Basically, under the VAT, you've got three forms of taxation. You've got fully taxable, which means it's taxable at 5%, and you get to fully offset any of your costs. You've got zero-rated, which is like taxable at 0%, so you don't charge any VAT, but you still get to fully recover or offset your costs that you paid VAT on. Tax-exempt, on the other hand, means you're treated like an end user, and it means any costs you incur in making a tax-exempt supply, such as the leasing of residential premises, are not able to be offset or recovered. So they become a permanent increased cost to any business that is involved in making exempt supplies.
Okay, thank you. Philip, if I can turn to yourself. If certain payments are VAT chargeable, but the contract is silent on the subject, what do you think is the default position?
Well, I'm sure there's plenty of people since VAT was announced that have started looking through some of their older contracts to try and see if the position was covered. And to the extent you haven't, that's probably an exercise that's worth doing. But on a positive note, the law has clarified a default position. The negative position is that to the extent you haven't provided for VAT in your contracts, the consideration under the contract will be deemed to be inclusive of VAT. So, however, I mean, having said that, the position under law is never black and white. You may be surprised to hear. You know, even if there isn't a specific VAT provision or indeed a tax position, it's possible that there are some more general provisions that you might want to look at to rely on in this situation, such as charges levied by a government authority, for example. So it really will then become a matter of interpretation as to whether or not the position's been covered off. But I guess as a summary point, it kind of highlights the importance of ensuring that certainly going forward, the correct provisions are provided for.
Okay, good. Tim, if I can come back to yourself. In terms of actual real estate, what exactly can be VAT chargeable?
Well, look, the relevance for us is, we look at it from an investment approach. So, look, we're trying to understand, whether there's any, I suppose, additional cost to us. Look, the most relevant thing in terms of the cash flow, though, really is the rentals. Just whenever we're doing any acquisitions, is just ensuring that the leases have provisions in there so that we're not having to absorb the additional 5% that's being passed through to commercial tenants. Look, in my mind, we've probably got a period at the moment until there's some further clarification in terms of some of the education tenants and maybe some of the medical tenants as well. But also just in terms of some of the OPEX is master's community charges, the service charges, insurance is exempt. But yeah, principally most of our operating expenses that are be coming through on the properties are going to have some form of VAT. That's the assumption anyhow. It's obviously a bit more, it's probably worthwhile being prudent on or biased that you're going to have those costs coming through, especially if you're going to be making acquisitions, then disregarding them at this stage.
Okay, thank you. Christoph, another crystal ball question for you. In your opinion, do you think estate agencies are ready for VAT in terms of staffing, knowledge, processes, procedures? What do you think out there?
Yeah, thank you very much again for this question. To be honest, I don't think that everybody will be ready. I think the bigger companies in our industry are probably prepared for it. I've just checked, like Dunia said before, I just checked 5 minutes ago on tax.gov.ae. There's a nice button to pre-register. I clicked on it, but nothing is working. And we have 3.5 months from today until the VAT will be implemented. the question now is, and I've seen this in the past with Emirates ID, with health insurance. As far as I know, with the GCC law, the GCC countries have committed by the end of 2018 that the law has to be implemented. So I think that Saudi so far and UAE are the only ones pushing it for the 1st of January 2018. I believe, looking back at the past, that there will be grace periods. I'm also concerned that we have in our industry the so-called one-man shows, and I'm not sure if they're ready from staffing point of view to implement the tax. From our end, we know that we have the staff, we've trained them, we've been through procedures. In our management, we have, the board comes from tax countries where they used to pay tax, so I think from the procedures it's there. I also believe that we need to look at the nitty-gritty stuff. For example, if you lease today commercial property, you have PDCs out there until next year. As far as I know, the VAT is triggered by the check itself. So you might have some VAT that is charged, not charged today, but with a PDC is charged. And then other questions will arise how that really is going to work. I rent an office as a company, but I have an individual owner sitting in the UK as a private person. How this really will be working, how this will be then issued or collected a tax, that will be a point to look at.
Okay. Philip, if I can turn to yourself. If a property has been delivered, but payments continue post-handover, say beyond 2018 when VAT actually comes in, how does this impact the transaction?
Well, I mean, stage payments are commonly used throughout the real estate sector, and the earlier project finance panel today discussed the increasing requirement for developers to look at stage payments that would go beyond the completion and even delivery of units. The law sets up a principle. It also states that the implementing regulations, the executive regulations, have yet to be issued. So we'll get further clarity on that, hopefully in months to come. My understanding of the position is that it depends on when supply is deemed to have occurred. And so therefore, to the extent that the unit is completed and delivered prior to the effective date of the law, then the transaction is deemed to not be chargeable to VAT. What I question is whether or not that also applies to the payments that are still to be made post-implementation of the law. I myself haven't got clarity on that point. It's one of the things that we are still looking to work out. What is clear, though, is seemingly if the property has not been delivered, even if previous payments have been made to a developer, for example, to the extent that the property hasn't been delivered, then the supply isn't deemed to have occurred. And so to the extent the supply occurs after the effective date of the implementation, then it certainly will be VAT chargeable. But again, I still need to clarify if they would look back on the earlier payments that have been made, and maybe another panel member has greater clarity on that, but it is certainly an area that we are looking for greater clarity on.
And I think that's what we have to take into consideration here, ladies and gentlemen, is that whilst we have a panel of experts here who obviously have a lot of information, a lot of knowledge, we're still learning about it. So that said, I would like to ask perhaps if the audience has some questions. I still have a few questions, but I don't want to hog the limelight. So I'm going to open it up to the audience. Does anybody have any VAT questions for the panel? Yeah, gentleman over here, if we can get a microphone to him. Also, if you can state perhaps who is your victim.
Hi, my name is Navroz, and this is regard to commercial property. The project is a ready project. The developer offered a payment plan. The project is, the office is already occupied by the client, and this agreement was signed last year. And there's a 2 years payment plan where 25% next year in 2018 and the following 25% in 2019. So how the VAT will be calculated on this property?
Well, I guess a little bit like what you already said. So if you can just highlight that again, perhaps.
Sorry, that was...
If you bring the microphone closer to you.
Yeah. Broadly, that was the point that I guess I just covered off in the respect that if the building in question has been delivered and is already being occupied, then it has come into being, then the supply occurred prior to the implementation of the law. The grey area for me still is determining what happens on the 2 outstanding payments in your example. And we're hoping that with the issuance of the executive resolutions that follow the law, greater clarity may be had on that, unless obviously another panel member has already got to the bottom of that particular point.
No one's willing to own up there, I'm afraid.
No,
David?
I think to your point, to the extent the supply has already been completed, the fact that the full payment hasn't been made doesn't have any consequence. So if the supply's been done, the property's been handed over, the service has been completed, the fact that there's still outstanding payment under the rules as they're written at the moment would have no consequence. Only going forward, that could be an issue because payment can trigger a liability going forward.
So the key is the handing over is what
Correct.
You're saying?
You have to have completed the transaction before the VAT commences if you want to keep it outside the VAT regime.
Perfect. So I hope that's answered your question. Any other questions from the audience?
So this will encourage people to speed up their construction projects to finish them before the end of this year and hand them over.
So, Dunia, let me ask you, what is your understanding of what is and isn't going to be taxed in relation to real estate?
The treatment is completely depending on the type of property. So first we see, is it commercial or is it residential? And I think Tim has already touched on that. But to go more into details, any property that is residential, whether it is being leased or being sold, it won't be taxed. It's exempted from tax, not even zero rated, it is exempted. As well as lands, bare lands. So plots won't be taxed as well. The sales from developer, within the 3 years, you have from the time of completing the construction, only the residential ones will be zero rated. And the commercial property, well, the commercial we have already touched on, residential is exempted, and the developer is zero rated. So we have 3 types of taxation here.
Okay, now this is a sort of an open question, whoever would like to take this. But how will companies in free zones be affected? Who's brave enough for that one? Tim, you're shaking your head?
Just waiting for those executive regulations, I think. Look, I'm unaware of, in terms of what that's...
Maybe
more to come after the federal decree law.
Yeah. Philip?
The law has a provision for designated zones,
Okay.
and it's largely anticipated that free zones will be designated zones under the law. My understanding of it is that trade between designated zones would be exempt, but there's a question as to whether or not business in the normal course of business conducted within those zones would necessarily be exempt. I think, again, we're waiting for the executive regulations to provide greater clarity on that.
Okay. I have another question again to the panel. Obviously, this is a GCC-wide directive. It's not like blockchain where it's just we are doing it. Do you think the other GCC countries are going to be ready by the 1st of January? Do you think we're going to be ready by the 1st of January?
Yeah, I mean, as I said before, as far as I know, Saudi and the UAE are really pushing for the 1st of January deadline. About the other ones, I really don't know. This is what I've read so far. 3.5 months from now, everybody being ready, I think you can add it together. I doubt it that everybody will be ready. You can imagine if the online registration is open, that also servers will be overwhelmed with everybody registered at the same time. So, yeah, let's see how it really. 1st of January, we all know more probably.
Okay, fine. Right, I'm going to leave the last couple of questions to the floor. Come on, I'm sure you've got some other questions over here. Would you like to bring the microphone over? That's why they're called runners, you see. You've got to get in there. Okay, thank you.
Hi, James from 360. It was mentioned that service charges will be VATable. If it's a residential property, surely it's exempt, so service charges then would not be charged VAT as well. Can someone clarify that? I know the legislation is still under construction, but...
Dunia?
In fact, I was last week at a developer's office paying our own service charge, and me and my husband has asked the same question, what is it now that the VAT is in place, and they have not yet received any instructions from the Ministry of Finance, so we do not know till now if they will be taxed or if it will be different between residential or commercial when it comes to service charges.
But Tim, you seem to think they would be, perhaps. Is that right?
Well,
again, your own opinion.
At the moment, I'm implying it is. Just simply, if you're going to be using someone to look after air conditioning or security or that kind of thing, the service charge is simply a consolidation of all those components, and I'm sure each of those businesses is going to want to charge VAT. So, look, the anticipation is that the service charge will be 5% higher because of that.
Okay. Hopefully that's answered your question. Over here as well, we can get the microphone. We've got about another 5 minutes, guys. This is just if you have a few more questions, that'll be great. Far away.
Thank you all. This is Vijay from the Arenco Group. The question is for any of the panelists. I'll actually have two questions. One of the panelists mentioned that for the exempt category, the input VAT, what is paid by the exempt category companies, needs to be borne in as their cost. Is it right? Extending the same logic for a real estate developer who has to sell within 3 years, what happens to the input cost which he has to pay on the entire construction cost? Is there a way of getting a separate refund back, or is that to be absorbed by them?
David, could you answer that one?
The developer will be making a first sale, right? And the first sale, as was explained, the first sale of residential premises is 0 rated. So if it's 0 rated, the developer can recover all of their input VAT. However, a landlord who purchases the property, so they get a 0 rated purchase, when they are then leasing it out, that's exempt, which means any of their costs that they incur, they cannot recover. But the developer's costs should generally be recoverable because their first sale will be of a 0 rated supply.
Thank you. What if the landlord who buys the property first time resells it?
Well, then it's exempt again after that. Only the first sale is 0 rated. Every subsequent residential sale is exempt.
Okay, thank you.
Any other questions? Over here in the back. 4 more minutes.
Hi, Hiba Jaber with DREI. Just a quick question for anybody that could answer it for me. Are you aware of any penalties associated with delays in actually registering? We know that January 1st, 2018, we know this deadline. Penalties, or are they going to allow us a little bit of a kind of flex time to phase out the process and understand it better? Thank you.
Okay, so who wants to go for that one? Perhaps a lawyer should answer that one.
I wish I could. I generally don't know the answer to that. We could certainly look into it, but...
I don't think anybody knows the answer. You have contact? Okay, go on, Dunia.
Register myself. It says in one of the posts that I read online that you could actually register by going to eservices.mov.gov. I went and I tried to register, and yes, I did register. It was just a login and a password that I had to do, and I got that, but I couldn't do anything with it. So I called the ministry, and they clearly said that it's not yet open for registration. It will be open by mid-September, and anything related to the process of it, it will be available on the website. So penalties or any other related subject to it, not yet clear.
So we have to wait sort of 5 days.
We will have to wait. We will have to see when it is released.
So you get your answer in 5 days.
The
Okay.
penalty regime is actually covered by what's called the Tax Procedures Law, which was a law that came out a couple of months ago before the VAT law. So if you fail to register and therefore fail to account for VAT as required, the base penalty is 300% plus the original tax. And if you are seen as acting negligently in failing to register, you could be charged with conducting a fraudulent activity, and that penalty is 500% plus the original tax, plus criminal action can be taken against you and or your business. So the penalty
David, when you
regime
say
is very hard.
500%, 300%, 500% of what?
Of the primary tax that you have failed to pay.
Okay.
So you have to pay the tax plus the 500%, so you'd have to pay 600% of the tax plus any interest for late payments and any other prosecution offences.
So in answer to Hibbert, it's not worth it, just pay
exactly.
it. Yeah?
It's a very harsh penalty regime.
Perfect. I think we've got time for one more quick question, if there is one. Here at the front, please. And then we'll wrap it up and go on to our next presentation. Thank you.
Thank you. My name is Ayaz Salman. I'm from Green Future. I just wanted to check when the VAT will be implemented, how Dubai market going to react in terms of foreign investors to invest in Dubai, and how Dubai is prepared enough that it still remains as one of the lucrative markets in the world to make sure that they consistently get the investment they are looking for, rather than just going down the road.
Did you get that?
Look, from my side of things, in terms of, look, we're typically out there buying commercial properties, industrial properties, some of the more substantial ones. If an overseas investor is purchasing those kinds of properties, they're going to register for VAT and also claim for that 5% as part of the purchase price. How long it takes for that money to be returned, let's see. But so I don't see that being an issue. It's probably more just maybe some of the tenants, maybe in the residential sector, living costs may be a bit higher in terms of having the 5% additional on there, and therefore does that create some pressure on the residential rents, whether it's affordable for them. From a process point of view, I don't see it being such an issue, though. Especially when some of the essential services are like education, healthcare, etc., don't have VAT on them.
Okay, like I said, we have some of the answers. We don't have all of the answers, but certainly I hope that some of your questions have been answered today. I would just like to thank the panel. It's 4:30 and we need to move on. So, ladies and gentlemen, big round of applause for the VAT panel. Thank you.